The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, let's check out where the markets are right now. We got the indices pretty flat and quiet on the day. Welcome on back here to, again, the Diagnostic Trading Hour, hosted right here on TFNN.com. You can also watch 9 hours of live trader commentary each and every day, live on Tiger TV at TFNN.com, or live inside the eSignal platform, as well as listen to us on the go on your mobile phone or on your tablet at TFNN.mobi. Let's check out where the markets are. Like I said, the indices pretty flat at the moment. We have the S&P is currently down 1.5. We have the Russell down 4. NASDAQ currently down 5, with the Dow down 17. We are starting to see a little bit of an uptick in the VIX, and hoping that we'll see a lot of an uptick in the VIX next week and pump up some of that premium. We got a lot of news coming out next week. We have, interest rates on what Aussie, Canadian dollar, euro, pound. We have the NFP reports coming out. So, and a lot of other pound reports and Aussie reports as well. So a lot of good stuff coming out next week. Ought to, finally wake the markets up a little bit from this summertime, lull. And either way, whether there's volatile markets or not, you can have volatile instruments. And that's what I was talking about yesterday with Tommy O'Brien on the Tommy O'Brien show in the afternoon. Is on there, and we were talking about how you want volatility as a trader. You live, you thrive. You have to have volatility. But sometimes you don't have a volatile market. Sometimes the market's just nothing's happening. Well, you can collect premium on it is one choice, and doing things like iron condors. Or you can go in and you can simply go in and make money on the volatility of a binary contract itself. So because it can move from 10 to 90 in a matter of a few ticks. So there is a way to get volatility. You get, time will be passing always. So that's one measure of movement. Okay, the market could be moving, or the contract you're choosing could just be volatile. So there's three ways to make money on a type of volatility. And you just got to see where the market's at and figure out what's the best way for you that day. If you see nothing's happening, well, let's look at some premium collection. Or let's look at some, very close, cheap, out-of-the-money binary movements, spike strikers, things of that sort. And there's always a trade. You just, you got to have enough plays in your playbook to do it. And sometimes it's the small little plays where you're using the putter. Sometimes you're going in with that iron, and other times, you got the driver, and you're just knocking it out of the park, going for those big, high volatility movement magnet plays. And hopefully we'll be seeing some of that next week. So get your magnet levels ready to go, because we got to see some good, solid moves. Hopping on over, let's check out the metals market. We got copper right now. Copper's down 1.5% on the day, so there's some volatility for you. And again, you can trade copper over on Nadex. We got gold. Gold is currently up 0.5%, up 7 points. So that's a decent move. $100 a point, $700. And we got silver right now. It's down silver is up 0.5% as well. Natural gas is the one that's down 0.5%. And we got oil is currently, up 59 cents. That's a nice move. We got corn pretty quiet, up just a few points. We got soybeans up 6 points on the day. And rolled on over to our currencies. Pound really quiet, currently down 2 pips on the day. Euro dollar's down 17. The euro pound is currently down 16 pips on the day. The dollar CAD down 6. Dollar franc is currently up 9 pips on the day. The dollar yen is down 10. Pound yen is currently down 28 pips. Euro yen's down 26. Aussie yen's down 4. We got the dollar index is up 0.096, and the 30-year bonds are up 1.4. So about a 1/3% move. So some nice movement going on in the bond market. Okay. Well, that is your lunchtime market wrap, just getting you caught up on everything, make sure you know what's going on. And we're talking about, sometimes these markets are flat and it's like watching paint dry, but that don't mean you can't make money with paint drying. And, some of you have full-time jobs where you got things you got to pay attention to other than just the markets. That's the beautiful thing about premium collection trades. This morning was going over some stuff with some traders. We were talking about the iron condors in detail. Now you go in and you buy the lower spread and you sell the upper spread. And we talked about putting together expected movements, not just deviation levels, because deviation levels are awesome, but they're for the end of the day. They're for total movement on a day, not end of the day, but total movement on a day. But what about for this hour or this 4-hour period of time? For instance, we were looking at the pound dollar. And it's about 11 o'clock when we were looking at it. We're like, okay, 11 to 3, what kind of movement expectation do we have? And so I put up the close-to-close expectations, and I put the high-to-low expectations. And and so in doing that, it's like, okay, well, where is my break-even? It's like, well, my break-even at expiration is where these two pink lines are on this iron condor we put on. If it expires anywhere in between that, every tick above that, this first pink line right here, this one, every tick above that, we're going to make $1. Every tick below this line, we're going to make $1. If it expires right in the center, we'll make maximum profit. Okay? Now, on the flip side, every tick above this line will lose up to $1. Every tick below this line will lose up to, $1. Or $1, not up to $1 or more per tick. Okay? So per tick we'll lose $1 outside of that range. So having that down and knowing that's where my, risk ratios are currently sitting, then I go, is this a good trade? Okay? Well, I'd lose on this trade I'd lose $6 if it moved the expected move, up or down, and stayed there as of expiration. I can bring in like $13, $14 per straddle I do. I can do 1, 10, 50, 100, whatever. Okay? $6 is basically what I would expect I could lose on trade. Now, if I got out, just in case it blew through the range, blew through the expectation, if I got out at a 1-to-1 max profit scenario, I'd basically lose $13, $14 on the loss. I could make $13, $14 if it expired right in the center. Okay? That's not bad. Okay, it's a 1-to-1 where my 1-to-1 is outside of my expected movement, and my break-even is within my close-to-close, meaning maybe it goes out, but I still expect it to bounce on back in. If it does move the expected move and expires right at the expected move, which usually it hits it and pulls back, then I'm only looking at, basically a 50% expected risk on my potential profit on the trade. So I like that risk-reward ratio. I like the probability of not having a full loss on the full potential profit. And even though the trade looks so abysmally small, I mean, it looks like, really, you're going to do this trade? I mean, because it looked ridiculous. Okay, we're talking like $6 on one side, $8 on the other side. Is this even worth my time? Well, to know that, I need to know the expected movement. I need to know the expected close-to-close. I need to know where my break-even point is. I need to know where my 1-to-1 max reward to loss would be. When I know those, I can look at it and go, you know what? As stupid as that sounds, that's not a bad trade. And obviously, I mean, you got fees that will eat up some of that. So, you have to go in, and as you get size going, then it'll pay for it. And it's not a massive profit trade. I mean, we're going to put up like almost $500 to do this trade, so we can make about 25, or not even 25, like $15. Okay, so it's not a massive profit trade, but you're talking about a trade that's going to sit there, do a whole lot of nothing for 4 hours, and be done. So let's say I had $240 risk on both sides, okay? So I got $480 risk, and let's say I bring in, $14 on $480. Then, that's about a 3% return. It's not massive, but most people would be, couldn't even imagine making a 3% return in 4 hours on their investment, okay? Now, that's not on the risk, because the risk would really, at worst case, be like 6% return on risk on the other side, right? Because it can't both expire above and below. It's got to expire either at one price or another. It can't expire at two different prices. So my return on risk is even better than that, and that's my worst case risk. Now, if I put my 1-to-1 risk, then I'm at a 1-to-1 because I'll just get out of the trade. I'll manage my risk. I'll use my stop triggers to manage my risk. And if I look at the expected range movement, if it did again expire that far, then I'm actually at like a 200% return on expected risk on the trade. So it can be real easy to confuse maximum risk with planned risk and expected risk. So my planned risk is a 1-to-1. My expected risk is basically 50% risk to 1 reward. Okay? And trades that may not look good may actually look great after you put all the details together. I looked at the straddle. It would have had to go outside of my expected movements, even on what my 1-to-1 would be on my Iron Condor. It looked horrible. It was like, you want a losing trade? Do a straddle. It was pretty guaranteed to to lose. And it always could move, of course, but there was nothing on the roster to make it move today. No reason for me to put my money on the line and think that was going to be worth it. Okay? Let's go and let's look now. I put that position on. I threw it up in the demo scanner just so everybody could sort of see, how it looked, how to put it on. Let's look at how that position is doing right now. And just did one contract as I was going over this with them. Right now we're up on both sides. So we have premium just decaying. We put it in at 11 o'clock. It's just sitting there. We're just going to hold the thing till expiration. Now, I know that sounds weird. If you listen to my show before, I'm like, do not hold to expiration. I'm talking about binary contracts, okay, where all or nothing happens based on a tenth of a tick. Okay, in spreads, it's simple. One tick is $1. One tick against me, I lose $1. One tick in my favor, I make $1. It's not all or nothing, okay? It's a variable payout contract. So I don't have that. I got to take my profit. Okay, often your profit would eat up so much of your bid offer would eat up so much of your profit, it's not even worth it. So, anyways, that's a very simple trade. You can set them there. You can do them 12 hours, 20 hours, 4 hours, 2 hours before expiration. Just make sure you know your expected movements and your expected ranges when you put them together. Okay? All right, we'll be back right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. And I have been corrected. We on TFNN have moved up to 10 hours, not 9, but 10 hours of live market trader commentary going on each and every day. So just keep adding to it. Eventually we're going to be around the clock. That's what's going on. So, but we're at 10 hours now. All right. Anyways, but that's just going through the iron condors. Like really simple, and I know you see like numbers like $1, $2. That means nothing. Don't limit yourself. That's one contract. Do 10, do 20, do 50, do 100, okay? So it can get bigger. And this isn't about making a massive amount of money. It's about making a consistent percent return day after day, low stress, little to no chart experience required besides looking at some expected movements and ranges. Just going to the thing makes sense. You don't have to read the bars. You don't got to read the volume. Now, I will back up on that and say, you know, looking at volume does help on one aspect, okay? Let me show you what I mean. If we go over and we look at the volume for today, notice how we're really under the expected volume, like this entire period so far. And let's look back at previous hours, 4-hour blocks here. We're really, I mean, there are the occasional spikes, but more often than not, we're not really exceeding volume. We had a little bit of a move right here. You can see it sort of broke out of that close to close where the volume exceeded, but then it just pulled right back into that close to close section. That's sort of been the theme of the day. It's really been the theme of the week, right? So on most of the markets out there. And there was a period last night where we got a lot of volume going on. You can see this right here. This is like an 8 to whatever. But the market, the pound dollar sort of took off. And look at that volume, exceed. I mean, it was exceeding like crazy. So it's not a big surprise. Still not too far off of the range. But, pulled on back in. But anyways, just so you can see, we're looking at least since last night, since that happened, even during the Euro session and all that stuff, really, we had like one little impressive section that pulled right back on in. It's just been quiet. And so that can give you a little more confidence when doing these neutral trades, that the market isn't going to take off on you. Of course, you never know, but, adding things in your favor, obviously when the market has a lot of volume, it's more likely to trend. That's when it's more likely to break out of a range. But you can go in and you can set your stops. You can manage that risk. You can set it at 1-to-1. You can set it up at the high and low of the range if you wanted to, and make it where it's still at 50% to 1. You don't have to have it all the way up at 1-to-1. That's just letting you see how far 1-to-1 is out there. You can choose if you want to make it tighter. Okay? But pretty simple. And like I said, there's only been like one session here in the last, 24 hours or so, where it actually broke out of its expected range. Right there. Go back, look at even yesterday. Nothing. Just a quiet week. And, a lot of people, they complain because there's no volatility there. Like, how can I trade this? Nothing's happening. This is how you can trade it, okay? You go in, and this is a simple way to trade it where you don't have to sit here all day because it's moving so slow. All right, now there are other things you can do. You can do things like spike strikers and things like that. And overall, they're working pretty well, but let's just say it's so quiet. You're like, I really like trading when there's some volatility. I don't like trading when nothing's happening, nothing's moving. Oh, there you go. There's your solution. Put on some iron condors and go play golf. I used to call this actually my iron golf trade. I didn't get to do them on 4-hour time frames because that didn't exist then. But I would go on and I'd put up 10, 20, 50, 100, 200, how many ever contracts up on the Russell. And I do iron condors on a really iron albatross when you get right down to it, really wide iron condor. And I put those on. I'd basically be looking to make between 3 to 5% of my total margin on the trade. And then I'd go play golf. I'd set my OCOs and everything else and all that in place. Let it take care of itself. Here's what I can tell you is I put those things on and I put them on wide. Really wide, okay? And if the market did move that far, it was going to hurt, okay? But here's the biggest thing I can tell you, is I wasn't able to put on a high probability trade over a 30-day period and have a 1-to-1 ratio where, it's outside of all expected movement, getting out 1-to-1, it didn't have to move barely at all, and I could get nailed at 1-to-1. So to have this kind of range where the market can really move, and I can still get that 3 to 5% return and do it multiple times in a day is awesome. That used to be a month, and with a much higher risk. This is a much lower risk, great return, better risk management, and it doesn't take 20 days, 30 days for the thing to pass by. It can take a few hours. All right, stay there. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Hecht's powerful weekly newsletter, the TECHNUMENTAL Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the TECHNUMENTAL Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the TECHNUMENTAL Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks. Let's see here. Welcome on back to the Diagnostic Trading Hour. I'm looking at some stuff. We got some puppies, by the way, so we got 2 more left. We're selling off. We got some Border Collies. And just trying to get all that stuff up and go and get them out the door. They're very fun. They're very cute, but it's time for them to find a new home. But got a few down and a couple left to go. All right. So if you live in the DFW area, the Dallas-Fort Worth area, email me if you want a puppy. Anyways, okay, so let's see what we got going on. We have, for this coming week, let's look at the VIX right now. I want to pull this up. I was covering this with some traders this morning. And the VIX is basically the volatility, the fear index, etc. And what we're really wanting is we want, obviously, higher VIX means higher premiums in trades. Makes it easier to do a lot of EPCs, ETCs, and you can go in, EPC being expiration premium collection, ETC being expiration trend collection. You can even get more money for your condors and your butterflies, all that fun stuff. So what I wanted to do is go through seasonality charts with you on the VIX and show you how that works. So if I'm in the Think or Swim platform, there's a lot of platforms, a lot of different things on here, but they have a simple chart type called seasonality. And I can look and see sort of what the seasonality is. And we've been a little off of seasonality this year. It's been a little bit interesting how it's been going on the VIX. And we've called it, but it's like everything's been just a little different than normal. We were looking at the summer, and we said we expect about the middle of July for the VIX to start taking back off. And let's see, what seasonality are we on right now? And we can go in here. Okay, so we got a 5-year daily seasonality. Okay, so that's not bad. And so we said somewhere around middle of July, we're going to expect it to pick back up. See, 722. So we got a spike right there early, 716. And then 723. Look at that. The VIX started picking on back up. Okay? Followed along and even had a little bit higher run than the normal expected seasonality. Usually we don't get as big of a move, but we got a bigger move than normal. We got like 7 points. And pulled on back. So, which is normal. You usually get a pull back in early August there. Usually spikes back up mid-August. Haven't had that spike back up yet. Starting to turn around. And usually we get our biggest spike right there at the end of September, early October. So, looking at the last 5 years, usually we have a decline in implied volatility over really the next few weeks, 3 to 4 weeks. That's a 5-year. Let's look a little further back, okay? Let's do we'll go narrower first. So to say 1 year compared to last year, what's going on? Compared to last year, we're going up. Usually it goes down. Okay, so if we go, what about 2 years? You usually see it's going down. You're seeing where the whole 3, 4, 5 year idea comes from. So we got that. We can do a weekly, so look at that plan. Looks about the same. Usually going down until about mid-September. Month is going to look the same. And then let's go back, though. Now let's start looking at 10-year daily. Okay, on a 10-year daily, we see, again, sort of late September till we really see the VIX start flying on up. 10-year monthly, it actually would start going up now on a pure monthly scale. 20-year daily, and we'd actually, so the 20-year cycle overall has actually seen the VIX start to pick up on 8/22, which is exactly what had happened this time. And it usually goes up until mid-October. So our 20-year cycle, which is what we seem to be mirroring a little bit more of right now, at least this part of the year, would be a little bit closer to what we may be able to expect. And as we're seeing where it goes up and down, this is what it's done over the last 20 years by the day of the year. And this is what it's doing right now. So we have that spike up, little, choppiness there, drops down, starts moving back up. So I'm hoping we're on the 20-year cycle here. We're going to measure out with that. If not, then it may go ahead and decline down until late September. We're going to find out and probably have a pretty good inkling on that next week when we got all these big reports coming out, all the, the GDPs that are coming out in different countries, the interest rates coming out, the NFPs, putting all those pieces together. And but as those reports come out, if we start seeing a downward decline, we should probably expect that downward decline to continue for a good chunk of the year. And let's see, right into October, November elections. And right about election time, that's when things start turning back down and the market starts running back up in November, going into the end of the year on that whole Christmas seasonality cycle. So if the downturn sell-off starts up and the bonds start ticking up and the indices start ticking on down, again, that would go with the 20-year seasonal cycle on the volatility index, and we would enjoy some nice movement. So I'm hoping that's what we'll get to see. All right, regarding the news and what's coming up, and I went through the news plan with you. Let me put it up here. We'll pull up Forex Factory and the news that's been going out. Let's look at what news did come out and what you could be trading, what you could be taking advantage of. And give me one moment over here just to open up today's report. All right, so we got, today is August 28th. We had a few different trades. We had the preliminary GDP along with pending home sales. We got yen housing starts tonight and CAD GDP in the morning. So let's pull up the euro dollar and let's look at it. Okay, so right here, let me get that one opened on up. And we'll look at where it's going. It takes just a minute. Okay, so now with the euro-dollar interest rate opened up, and I'm just making some notes for my news plan. Okay, so let me pull that over here. We had the announcement being released on 7/9 for the preliminary GDP this morning. We said, hey, we expect this to be basically a non-event, an absolute non-event. And I said expect the euro dollar to basically stay somewhere inside of a 20 pip range during this time frame. And that was between 8 and 10 a.m. So we're looking entering as early as so 8 for a 10. You could also do an iron condor entering as early as 7 for a 9 a.m. expiration. So let's just do the 7 to 9. So we'll look at the 7 right here. We'll go to 9 right there, and we had a net movement of a whole 2 ticks. If we go in and we look at up here, net movement of 12 ticks. Okay, so up move of 12 ticks, like a down move of 5, and a net of 2. So meaning from open to close. So whatever you got on that iron condor, it worked out well. And understand, when I'm going over the iron condors with you, I'm going over like expectations on news. You can tie in expectations of movement as well. So you can go in and look at expected range, and you can go in and look at close to close, and tie that in with the news, and sort of, filter the two together and go, hey, does that look like that still could be a good trade? We don't expect it to move more than 20 ticks. If it does, well, maybe I can get 15 ticks for it. Okay, so would that be a good trade still? Yeah. Let's look at the expected movement. The expected movement says, hey, we expect to move like 6 ticks or 8 ticks or whatever. And so depending upon what the expected movements are, we basically add 24 up or 24 down with a 12 close to close. So maybe if you can get 15 on that, it's still inside the close to close. It's still a good trade. So, the news is just one aspect to give you an idea and to start making you aware of the trades that exist that are out there. And sometimes you may have to leg into these trades. You may have to leg into the long, and then it went down, it went into the short. You may not have been able to get both sides. You may have got both sides. Maybe you took less. Maybe you got it for 20, But just to lay the trade out there to sort of show you how these iron condors work. Hopping on over, we got pending home sales. That was right afterwards, okay? This one we said, there might be a little bit more movement. This one, it's actually more than the GDP, which is sort of funny. And taking that 9 to 11 o'clock. So going from 9 to 11, we got a net movement of like 4 ticks. So like nothing happening at all. Great iron condor trade. This is what we expected. We said, hey, you know what? We expect at most a 25 really tick move on this trade. Really not expecting more than that. So if you can get $25, awesome. If you can get less than that, even better. But I'm looking for about 25 ticks of movement or less, most likely less. And we definitely got the less. So looking at the expected range on this, what was the expected range from 9 o'clock on up? And this is actually a little wider than it needs to be. It says 33. If we break that down, let me go in and let's go over to our indicators. And let's set the expected ranges on these. I want to say we're going to do 120, and we're going to set it off by 60 minutes. Let's see if that'll work correctly for us. That's my guess. If not, then we'll change it up. But I know I want 120 because I'm getting it at 9 for an 11. And I figure if I want it on an off hour, I need to, just put it to 60. So let's see if that works. That didn't work. Like I said, I'll do one more little change on it, but I would think that would work for us. Just a matter of making sure it starts at 9. That's the trick. All right, so it started at 9, went to 11, worked out perfectly. What was our expected move right here on the euro dollar during this time frame? Move of 25 pips. Well, that's what we said. This is yesterday. Expectation of movement, 25 pips between 9 and 11. So really the news not really having a massive consistent impact. That was that's how much the market moves on that day of the week, that time of the day, pretty much every week. Okay? And we recalculate those numbers every single week for you and go through that so that way you have up to the minute stats there. An expected movement of up to 13 pips Moved a little more than 13 on the close to close, but it came right back inside that close to close, that darker range box, just as we had planned. So what else do we have on our list? Tonight we got an 11 p.m. to 7 a.m. That's going to be our housing starts on the yen. Again, enter at 11 for a 7 a.m. Looking for ideally a $30 profit. Go ahead and plot your expected ranges and close to closes, but ideally a $30 minimum profit on that trade. You might be able to get away with less. Again, just plot it out, look at it, see what makes sense. Tomorrow morning, what do we got going on tomorrow morning? Let's look at that. We're going to have the Canadian GDP coming on out. Usually not a market mover. Add on to that, it's a Friday. It's a Friday before a holiday. So we actually have an expected movement of a mere 20 pips in the Canadian GDP. Think about this morning. It was GDP. Didn't move at all. Don't know if it's going to be the same tomorrow, but that is our expectation of a mere 20 pip or less move between 8 and 10 a.m. So we're looking for at least a $20 minimum take profit. Minimum profit on the Iron Condor. Again, that's where we're trading on Nadex, where we're buying the lower spread and selling the upper one. If you hop on over to TFNN.com, you click on the Nadex banner on the right side of the page, get an account, go to trading, demo trading account, put in your username, your first name, your last name, your phone number, your email address. Click apply for demo. That'll get you an email right away. You can log in and start learning about how these trades work. You can check out webinars and stuff that they offer. Also, if you hop on over to TFNN.com, you can go on down here, and we have our spread scanner. You can check that out for free as well, and it makes life so much easier. So right there, the box spread analyzer now includes the binary analyzer as well, and the deviation levels. So always adding in more features to it. But come over, check that out. There's a lot of education in there to get you going. And, of course, I'm here each and every day to teach you how to put it together. And always, here to take your calls if you have any questions on how to make these trades work and what's going on with them. What are some of the pieces? So that'll get you caught up there. What about next week? I'm going to be out of town Tuesday and Wednesday. It's my birthday, so I'm taking a couple days. What do we got that you need to be aware of? We're going to have on the 31st, we're going to have the China manufacturing PMI, and then so that'll affect the yen and affect the Aussie. Most markets, Nadex and stuff, are going to be closed until at least 6 o'clock on Monday, maybe 12 o'clock on Tuesday morning. I'm not quite sure exactly when they're reopening. I haven't looked at the exact calendar there. But either 6 o'clock Monday or 12 a.m. Tuesday, one of those two, they ought to be opening back up. So we'll have the bank holiday here. Canada's also going to have a bank holiday. So, yes, you can trade foreign exchange to a lot of places. You also can trade certain markets on different exchanges throughout the world. A lot of the exchanges here, of course, are going to be shut down. Just be careful. Liquidity is lighter. There's just not as much volume at all. I mean, you thought this week was light. It's going to be really light then, which can be great and can be horrible. So be very careful. We got pound PMI is going to be coming on out at 4:30 there on the 1st. Rolling into the evening, potentially building approvals right there for the Aussie, a 6 to 11 trade. And we'll also have the interest rate. So we'll talk about the 1st, 2nd, 3rd, and 4th, get you caught up, just in case you didn't catch it on the last show. And so you'll be ready for the news trades coming up for this week. Stay right there. We'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this status, and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. So just looking through, like I said, the different news events that you want to be ready for this coming week. We talked about things coming out Sunday, so you have those on your list. And then Monday with the holiday going on, but several reports coming out that night. And we'll have, like I said, the Aussie cash rate, the building approvals, all coming out that evening. Technically, Aussie cash rate comes out on Tuesday morning, but you can get in on Monday evening on the Iron Condor to get it a little bit early. And you got the building approvals as well that you can play that night from 6 to 11 o'clock. In addition, the pound PMI is going to be coming out Tuesday morning, getting that at 11 o'clock on Monday night, and we can do an Iron Condor there. So what are the numbers you need to be aware of on that? On building approvals, looking for a 25 pip minimum profit, means a 25 pip or less move expectation. On the Aussie cash rate, we're going in for a $40 for the 7 to 11 minimum profit on the trade, and meaning a $40 or less expected move on their interest rate announcement. Over on the pound construction PMI, let's see here. We got a movement expectation of 20 pips on the PMI. Pretty small move on that. And so putting that one in, 20 pips minimum profit. So got that on the PMI. And then let's see here. What do we got? Let's see. We're going to have some other trades on Friday. And I'm sorry, I just got to get a couple of these pieces together because I want to have them all there for you. Okay. All right. So we're going to have the that's the iron condor, that's the Chicago PM or the pound PMI, and then over on the second we have the ISM manufacturing. That's going to be a 9 a.m. to 11 a.m. entry for a $20 minimum profit. Okay, that's on September 2nd. And then we're going to have the Aussie GDP that night from 6 to 11. We got a $40 minimum or maximum expected move, minimum profit on an iron condor that's entering at 6 for an 11 o'clock expiration. Taking it a little bit later, we got the pound PMI. So we have the construction PMI on the 1st to 2nd, okay? So starting on the 2nd for the 3rd release, September 3rd release at 4:30 a.m. We're going to get it at 11 p.m. on Tuesday night the 2nd for a 7 a.m. expiration on the 3rd on the services PMI. And on that one, we have a little larger expected move, 30 pips of expected movement. Going into Euro retail sales, we have like no movement expectation on the Euro on the 2nd and 3rd evening overnight session. Actually looking for a minimum profit of 15 ticks is all we're looking for. 11 p.m. to 7 a.m. on the Euro retail sales. Release coming out at 5 a.m. Now, things are going to wake up a little bit as we move forward. We're going to have Aussie retail sales. That's going to be 6 to 11. Okay, so 6 p.m. entry for 11 p.m. Expiration on the 3rd, and for a $30 minimum take profit. Then we're also going to have some rate statements and things coming out, so let me bring that up. Bank of Canada rate statement coming out, and that release is going to come out at, let's see, at 10 a.m., and we're looking for a 9 a.m. entry to an 11 a.m. expiration, so not a lot of expected movement there. We'll pull that back up here when we get back. So, hold tight. Oh, yeah, that's it. So, we'll catch the other ones up tomorrow, and I hope you all have a great day. Thank you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.